and welcome to Stock Market Today. You have Alyssa Corum and Ed Carson here. We're going to break down the down day that we had across the board for the major indexes and take a look at a couple of individual names. Ed, what do you have for us today?
Yes, Ali, today we are going to take a look at Ford, which powered to multi-year highs, while Target and Zoom reversed lower.
That they did. First, a look here is the NASDAQ closing down today by 1.7% by the end of the session. The S&P 500 down 0.8%. The Dow, the least hit, down about 0.5%. And we also have the Russell 2000 down 1.5% as well. So tech getting hit heavy here today. And talk to us a little bit about the technical levels of note in today's session.
Yeah, I mean, today wasn't too surprising. We had a nice gain yesterday. It closed just above the 21-day line, the NASDAQ did, but essentially we hit resistance at the 21-day line and maybe last week's highs, or at least the midweek highs. So it's not that surprising it came down. We came down to the 50-day line, so or close to it, but we're not below it. So it's basically, we haven't really changed anything. And in the market rally would probably still be okay until we got to that 13,000 level, last week's lows, and that kind of area. So we're still in the same kind of boat. I mean, look, we'd rather be where we were at Monday's close than Tuesday's close, but it's still the same situation. We're still in flux. The market is under pressure. Market doesn't have clear direction. We're not breaking through or breaking below right now.
That's right. I mean, yesterday was very close to, like you said, we closed above the 21-day, but we did not get above the prior week's highs. So that did seem like a glimmer of hope here. But just given the broader context, we weren't, raring to go. All right, pedal to the metal. Let's get back in here. Like you said, not all too surprising what we saw today. But what about for the S&P 500? What can you provide us in terms of additional context for these other major indices?
Well, I'm not quite sure if it closed above. It's probably closed right around the 21-day line. I'm trying to see when it actually finished there. It's about where you'd expect.
Yeah.
No, just below.
I think below.
Yeah, below. So it's about where you'd expect. It was an inside day for sure. The NASDAQ technically it wasn't quite when it finally finished, but the S&P definitely an inside day. So nothing too special. It's in that range. It's holding up better, obviously, than the NASDAQ. But if the NASDAQ and the market really took a tumble, you presume the S&P and the more resilient stocks should be falling too.
Yeah, and speaking of resilient, it seems like blue chip stocks have been more resilient than some others with some tight action here. But last week, the volatility hit that area of the market too. So what update do we have here in terms of how other pockets of the market are performing beyond growth?
I mean, obviously there's the cyclical areas, the economy coming back online is really important for them. Interest rates, while they were flat or down a little bit today, they've been trending higher. So that's good for the financials. So it's understandable that those real economy names are having a good situation here. I mean, honestly, it'd be great if the market could go sideways for a few weeks and we could get some real bases, but the market seems to like to just either keep getting extended, then sell off and then bounce right back. And because you can't form bases with chart action like that. That's not going to form a cup with handle base in a 4-day move.
That's right. Those are few and far between right now. And we do have one last broad market chart that we want to look at, and that is the Russell 2000, which has seen a huge run over the last couple of months. It's well above its 50-day line, but it's getting beaten around. And again, today it was almost hit as hard as the NASDAQ, it looks like, at 1.7% as well.
Yeah, look, when the markets get under pressure, there's no safe spaces, really, or at least not for long. And it's doing all right. If the market strengthens, then presumably the Russell price, presumably everything will strengthen. But you just can't expect that. It's still just dicey all around.
Well, like you said, if we see more sideways action and we start seeing some stocks looking more like this, then maybe we will get more of those bases. But one stock that was a standout today was Ford, gaining over 5% above average turnover with a breakout itself. This was our stock of the day last week as it cleared 2 buy points here over 12.14 as well as 12.25. Either way you slice or dice it, but it powerfully moved back above that level today, and it held up really well last week too, which is impressive to note, I think.
Yeah, because last week some of the cyclical names in the Dow and the S&P, they all came under pressure Thursday, Friday, and yeah, Ford sort of backed off a little bit, but it was still a solid week. And now you see it was really strong action, didn't give up anything. As you say, the volume is strong. The RS line is at a, is at a 52-week or like a 19-month high. So there's a strong signals for whatever reason. The market is really liking Ford and General Motors and maybe some of these traditional automakers, and some of the EV makers are just out of favor for the moment. So, this is definitely, it was really impressive how well it held up. I would have thought it would have come back down some more, but it did not.
And let's just see, it is now about 16% above the 10-week line. Does that have any bearing at this point, given the fact that it did gain another 5% today in terms of it being actionable still?
I mean, it is in range of those buy points, certainly the 1225 buy point.
Mhm.
But yeah, that's rather extended for Ford, but so that is something to keep in mind, is how extended can you expect an automaker like this to be? But from the context of its consolidation, it's still in range.
Mhm. That's right. And just really quickly before we move on, given the backdrop of the overall market, how should investors be approaching making new buys right now?
Yeah, I think you should still be pretty hesitant. I mean, just because you have one good day, the stock you could easily reverse. Um, I think it's important to have some cyclical names. You'd be looking for them, and maybe even have some in your portfolio. But it's not going to save you. It's not like a vaccination that's going to prevent you from having any problems in a market correction if we have one.
Such a good point. And as always, when you're making a new buy, make sure you have that exit strategy in place. That is something very important to do. So that way you're not getting blindsided if the market does take a turn and stocks that were breaking out get dragged down along with the broad market. And next on our list, Target. Speaking of getting dragged down, this one really had a bad day. Big downside reversal, closing down almost 7% on the day. Huge volume. I mean, look at this big volume spike. That just really sticks out. Seems like today was a pretty big character change for Target in reaction to this earnings report.
Yeah, that's a great way to play it. Is this one, maybe the big run it's had over the last several months may be done. That was not good action. One of the things we often say, don't buy ahead of earnings. And it had earnings before the open, and it looked really strong. It looked actually sort of flashing buy signals. You could have drawn a trend line. It was rebounding from its 50-day line. There was a lot of reasons to say, yeah, go for this, kind of thing. But, especially when a company doesn't give out guidance in its earnings announcement. If the conference call starts after the market open, you may want to pay attention. And that's what happened, because this stock was rallying right until about 10 Eastern. And I assume that's when the conference call started. Bad things happened. They basically said, we're going to spend a lot of money to keep our online growth going. And, growth is going to slow just because the coronavirus pandemic is likely to wane over the next coming months. That's expected, but you spend a lot of money to do that, which may pay off big dividends. We just did an A1 story talking about how a lot of retailers and companies are trying to automate their online services to become profitable in those areas. But investors didn't like to hear it today. That was really ugly, undercutting the lows of the base. All of a sudden, what was looking so promising just a few minutes later just really turned around.
That's right. And yet another example of have that sell strategy in place. Just because
Oh,
something
yeah.
looks good when you buy it, you can't ignore those signs. Even when you are seeing another quarter of 20+% sales growth, pretty decent earnings growth. Like you said, those conference calls and the guidance or lack thereof can impact the stock. So really important to keep an eye on those intraday charts when you're playing those earnings moves. And last on our list, Zoom also had a big downside reversal, closing down 9% today. Heavy turnover for this one as well. And this is also on the earnings report. So fill us in, give us a little more context of what went down with Zoom today.
Yeah, I don't know why it went down, because the earnings were last night. The conference calls, I think it's just, I mean, it came out, and this kind of, definitely if you take a look at 5-minute chart on this one started off strong, but immediately turned around. That's actually a 1-minute bar to start. So by the second 5-minute bar, by 6 minutes in, we were coming well off the highs. and it didn't take long before it was just a negative day. Going back to a daily, you know, obviously this wasn't a traditional buy advice. You could have seen that there was right at the open, it was sort of breaking a trend line, but this is why you wait a few minutes at the very least. Certainly something so deep in the base. And it was just ugly action. You have to want to use, you know, and this is also why we talk about selling on technicals. I mean, this wasn't really a buy, but you know, the numbers were phenomenal. You cannot be
Mhm.
upset with the numbers that, you know, it's like, look at those, they're just way above triple digit. When triple digit doesn't do you justice, but you just have to, you know, that the peaks can come, and maybe the peak was a few months ago. Sometimes the peak comes when the numbers are accelerating and everything is absolutely on fire. Uh, that's why we've talked about technicals, because that growth will slow down. The market is forward looking. It'll see those things going forward and decide, you know what? I just think that Zoom is not going to advance, at least the stock.
That's right. Thank you for that explanation, Ed. We're going to keep tabs on all of the moves in the market and individual stocks, not just on this show and not just on investors.com, which is another really great resource, of course, that we highly recommend you checking out and checking in on throughout the day. An easy way to do that is to download the IBD app and get push notifications sent to your phone. And we also have Leaderboard Scorecard today. So make sure you check that out, happening soon. So go to leaderboard.investors.com for that. And tomorrow we have our Swing Trader Scorecard, our monthly webinar for subscribers, breaking down the action over the last month. And we'll leave it at that, Ed. We have IBD Live tomorrow morning. So we hope you all join us. Investors.com/IBD Live. We will see you there.